Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, interest rates are the big story in the news alongside inflation. The 10-year US Treasury yield is just above 3% midweek this week, a little bit below that by the end of the week, up near its highest level since the fourth quarter of 2018. Valuations obviously under pressure, earnings hanging in there, but we'll talk a little bit about how valuations have been compressing here lately with the downward move in prices. And finally, technically, take a look at volume. A couple signs this past week that maybe we're seeing the early signs of that climactic selling that we typically see historically. So rising interest rates. This is a chart of the US 10-year Treasury yield from 2017 up through midweek of this week. We can see it's risen up above 3% that it reached. That was the highest level since the fourth quarter of 2018. If you remember back then, that was right around the time when the market experienced an exceptional amount of volatility with the S&P 500 pulling back nearly 20% and the small caps nearly 30%. Interestingly enough, that's almost the exact same amount of a drawdown that we've had this time. So something to keep an eye on in terms of pressure from interest rates. But stepping back longer term, this is a chart, same bond yield going all the way back to 1985. We can see the long-term downtrend in yields, which obviously coincided with the multi-decade bull market in bond prices, but somewhat significantly, this rally in the early parts of 2021, and of course, the start of 2022, the big two leg up, if you will, of this bond yield increase has significantly broken that multi-decade uptrend. So are we in the midst of a regime change, if you will, in terms of interest rate environment? Technically, you could argue that this downtrend has been broken with this latest tightening cycle by the Fed. Now, valuations have been under pressure. We talked a little bit last episode about inflation adjusted valuations extremely high and how historically these high inflation numbers do put pressure on valuations. Well, just looking at valuations on their own, this is the price to earnings ratio at each of the past several decades since 1960. And you can see to start the year at 25 trailing PE ratio for the S&P 500, much higher than the average PE during the previous decade. So we were already overvalued, if you will, from a pure valuation perspective. We've seen that drop down to 23, but that is still elevated, especially with inflation at 8%. Still, CPI report just came out early morning yesterday, still quite high, and interest rates above 3%. And the Fed talked about pushing that continually higher with multiple 50 basis point cuts. There's no doubt that this high interest rate and inflation environment is putting pressure on equity valuations. Now we've had about 18% pullback in the S&P 500, nearly 30% in small cap stocks here. If you look at May 5th and May 6th of this past week, we had a couple interesting developments in terms of that panic selling, that climactic selling that perhaps we're searching for as we're navigating whether or not we are near that capitulation stage and market bottoming process. We had 2 different days of 15 to 1 volume. That's 15 times as much volume on downside issues as upside issues. All right. So all the volume was selling. It doesn't happen very often. Last time it happened was back, if we compare it to that bear market bottom rather, in the first quarter of 2020 during the pandemic recession, that actually occurred 6 different times during that bottoming process. So it does happen in clusters. And one of the things we'll be searching for is whether we start to see a confirmation of demand come back into the market, where we actually see on the flip side, perhaps 9 times as much volume and 9 times as many issues on the upside. So you want to see that climactic selling followed by that big amount of buying. So we'll be watching for that. We've had a pretty good day so far on Friday. We'll be monitoring that. With that, you've got a bright red, unique kind of cool sky here. This is actually reality. This was over in China on a city on the eastern part of China. They saw what they referred to as a blood red sky on May 8th of this year. Everybody was wondering what is going on. This is crazy. Everybody was cell phones, recording, posting it on Twitter and different social media networks. Scientists came out and said, no, it's not the apocalypse. No, it's not something crazy. They actually claimed that it was the reflection from low clouds, some phenomenon reflecting the bright red light from fishing boats in the local sea around that city. So pretty interesting if that's the case, but I think citizens were quite stunned. I'm sure most of us would be too if we looked out our window and saw that. So with that, I want to thank everyone for watching, and I'll see you next time.